Hey everyone, and welcome back to Time to Buy or Sell, the podcast by Weichert Realtors Sierra Pacific Group. We're here to keep you up to speed on what's really happening in the greater Sacramento real estate market so you can make confident and informed decisions, whether you're buying, selling, or just keeping an eye on the market. I'm your host, and today we're diving into the latest update on the Elk Grove housing market. We'll break down what's changing, what's holding steady, and what it all means for you as we close out 2025 and head into the new year. Okay, so let's jump right into this deep dive with the numbers. The headline for single-family homes in Elk Grove right now is a median sale price of roughly $616,000.
Right.
And the really big news, the thing that I think is catching everyone's attention, is that prices are down about 5% year over year. I mean, that's the first annual drop we've seen in nearly a decade. It sounds pretty dramatic.
It does. And, you have to look at the context here before anyone starts to panic. This is a bit of a market correction, I'd say, not a collapse.
Okay, so not a collapse.
No, not at all. Home values in Elk Grove are still up, something like 40% since 2019. So you're just wiping away a little of the froth from the top, not touching the foundation.
That makes sense.
And what's really interesting is how that's changed the competition. The sale-to-list ratio is sitting at about 98, maybe 99%.
So what does that mean for someone listening?
It means that buyers have some of their negotiating power back. A home listed for, say, $620,000 is actually selling for just under that. The days of automatically offering way over asking are, for now, mostly gone.
And that seems to track with the changing pace of the market. Things have definitely hit the brakes a little.
Yeah.
Days on market, or DOM, has jumped up to a median of 45 days. Last year at this time, it was only 27 days.
That's a huge shift.
It is. So wait, if we have a 45-day market time and a 5% price dip, how can we still call this, somewhat competitive? Who actually has the leverage?
That is the key question, isn't it? And the answer really is all about the low inventory. It's still a mild seller's market, but only because there are so few homes for sale.
So supply is still tight.
Extremely tight. We're looking at about a 3-month supply, and a balanced market is closer to 5 or 6 months. We've only got about 378 active listings. That scarcity is what's preventing any kind of major price drop.
So for sellers, the data is telling two different stories then.
Exactly. On one hand, you still have an advantage because supply is so low, but on the other, you absolutely have to be realistic with your pricing.
Or you'll get left behind.
You will. We're seeing about 34% of listings needing a price reduction. That tells you the market immediately punishes overpricing. But well-priced homes, they're still moving fast. We're talking a median of just 26 days to go pending.
Okay, so for sellers, the advice is to use that huge cushion of equity they've built up since 2019 and price competitively.
Precisely. Leverage that equity to attract serious buyers.
Now, on the flip side, this really does feel like the best window we've seen for buyers in years.
It absolutely is. That 45-day market time gives you room to breathe.
Right, you're not making a decision in 24 hours under pressure. And the bidding wars are gone. We're seeing an average of maybe 2 offers now instead of 5 or more.
And buyers can ask for contingencies again. You can have an inspection. You can have an appraisal contingency that was almost impossible a couple of years ago.
Yeah.
And all this just highlights why Elk Grove is and continues to be such a draw. It's led the whole region in price growth, a 42% increase over 5 years.
Which points to its long-term value.
Exactly. It's still a magnet for families, with the great schools and community feel. And when you compare it to a place like Folsom, where the median is almost $760,000, Elk Grove's affordability really stands out.
So looking ahead to 2026, what's the forecast?
Well, most analysts are expecting things to stay pretty flat, maybe move a little bit up or down, but no wild swings.
And it all comes down to interest rates, I assume?
The whole game hinges on mortgage rates, yeah. They're hovering near 7% right now. That low inventory is kind of a safety net, keeping prices from falling.
But what if rates drop?
If rates ease up, and some people are predicting they could fall to around 6.1% next year, demand is going to come roaring back. And with so little inventory, that will immediately put upward pressure on prices again.
So the advice is, act now.
For pre-approved buyers, yes. The biggest risk isn't waiting for rates to drop another 1/4 of a point. The risk is waiting for all the competition to jump back into the market with you.
And for sellers.
For sellers, price it right. Get on the market now while inventory is at rock bottom and capture the attention of these very serious buyers.
If you're thinking about selling and want to know what your home is worth, or if you're a buyer trying to figure out your next step in this market, we'd love to talk with you. Call our office at 916-619-1971 or visit us online at wrspg.com. Whether you're ready to make a move or just want to explore your options, we're here to help. Thanks for tuning in to Time to Buy or Sell. We'll catch you next time.